$60 million. That's how much North Carolina is about to invest in affordable housing right now. But here's the part. Nobody's telling you. While everyone's looking at Florida and Texas, North Carolina is experiencing a silent economic transformation that could make you rich or cause you to miss the opportunity of the decade. In the next 8 minutes, I'll show you exactly why institutional investors are pouring billions into this state and how you can position yourself before it's too late. Stick with me, because what you're about to discover could change your entire approach to real estate investing. Welcome to the Housing Compass. I'm David, and today we're analyzing one of the most undervalued states on the East Coast, North Carolina. This video isn't your typical invest here, get rich rhetoric. No. Today we're breaking down real data, concrete government programs, and economic trends that are shaping what could be the real estate market of the late 2020s. We'll cover why Governor Josh Stein is investing record amounts in housing, the post-Helene federal programs creating opportunities worth up to $15 million, the cities and counties where the data says to invest, and most importantly, the risks you absolutely need to know if you're looking for where to invest your next $50, $100, or $500,000, or simply where to relocate for quality of life and wealth building. This video is for you. Let's start with the fundamentals. On January 5th, 2025, Governor Josh Stein delivered his State of the Economy address in Winston-Salem. And his words weren't empty political rhetoric. They were a precise blueprint. Stein described North Carolina as one of the fastest growing states in the nation. Not growing, not promising, fastest growing. And he identified two critical problems. One, a shortage of skilled workforce. Two, a dramatic shortage of affordable housing. Now, as a real estate investor, when you hear housing shortage in a state experiencing explosive economic growth, your ears should perk up. Because you know what happens when demand exceeds supply, right? Exactly, prices rise. But there's more. Stein didn't just identify the problem. He announced $60 million in state investments for affordable housing. And this is where it gets interesting. Because when government invests massively in a sector, three things happen. 1. Private investments unlock, usually at a 3-to-1 or 4-to-1 ratio. 2. Tax incentives for developers get created. 3. The market stabilizes, reducing risk for investors. In other words, North Carolina is saying, we have a supply problem and we're about to solve it with real money. For you, the investor, this means a limited time window before the market normalizes and margins compress. Now let's talk about the elephant in the room. Hurricane Helene from fall 2024. Natural disasters are human tragedies. But for an informed investor, post-disaster reconstruction programs represent some of the most lucrative and lowest risk opportunities in real estate. Why? Because you have guaranteed federal money, clear timelines, and certified demand. Here are the concrete numbers. North Carolina received $1.4 billion in federal grants for post-Helene reconstruction. Not millions, billions. This money is divided into 3 programs. 1. Single-family housing, $800+ million, already active. 2. Multifamily housing, $191 million, opens early 2026. 3. Workforce housing, $53 million, follows multifamily. Now, the single-family program is already saturated, nearly 5,000 active applications as of December. But the multifamily and workforce programs, those are opening right now. And this is where it gets really juicy. Multifamily program, small projects, 2 to 4 units, $250,000 to $1.5 million. Large projects, 5+ units, up to $15 million per project. Priority to areas with high cost-to-income ratio and elevated poverty. Multiple application rounds over the next several years. Workforce housing program. Focus on ownership, not rentals. Target. Households up to 80% of median income. Eligible. Local governments, private companies, non-profits. Likely just one application round. Do you see the strategy? The government is essentially saying, we need to rebuild the housing stock in the western counties. We'll give you up to $15 million if you have a valid project. For developers and structured investors, this is a goldmine. You have nearly free capital, guaranteed demand, people who lost their homes, and complete administrative support. But it doesn't end there. Because beyond the Helene programs, North Carolina is distributing massive grants for neighborhood revitalization. In December 2024, 8 communities received $12 million in CDBG neighborhood revitalization grants. And looking at the list of recipients, a very clear pattern emerges. Here are the cities and counties that received funding. Avery County, $5 million, the largest grant. Jackson County, $2.5 million. Town of Bethel, Elm City, LaGrange, Nashville, approximately $1 million each. Other smaller projects. What does this tell us? First, the government is investing heavily in Helene-impacted areas. Avery and Jackson County are both western counties hit by the hurricane. Second, there's a focus on rural communities and small towns. Not Raleigh, not Charlotte. Bethel, Elm City, Nashville, these are markets where you can still enter with relatively limited capital. Third, these grants require that 70% of funds go to projects serving low to moderate income households. Translation, there's a massive push toward affordable housing, not luxury development. For you as an investor, what does this mean? It means if you're looking for markets with high appreciation potential but still accessible, these small towns with government backing are literally marked on a map for you. Since 2017, North Carolina has distributed over $355 million in CDBG grants. This isn't an experiment. It's a proven strategy that works. Okay, we've talked about the opportunities, but every serious investor knows you must also analyze the risks. So let's talk honestly. Hurricane Helene wasn't an isolated event. North Carolina has growing exposure to extreme weather events. If you invest in the western counties, you must factor in higher insurance costs and potential for new disasters. Many of these opportunities are tied to federal funding. If the federal government cuts programs or changes priorities, the market could slow dramatically. The multifamily and workforce programs are opening now. This means you'll have competition from institutional developers with more capital and experience than you. You need to be fast and prepared. Investing in small towns like Bethel or LaGrange is less liquid than investing in Charlotte. If you need to sell quickly, you might have difficulties. You rarely have a government explicitly telling you, we need X housing here and we'll give you money to build it. This enormously reduces demand risk. You're still early. The programs are about to open, but they're not full yet. Those who move now can position themselves before the competition. If your portfolio is concentrated in Florida, Texas, or California, North Carolina offers geographic diversification with solid fundamentals. Beyond the Helene programs, North Carolina has very strong demographic trends: growing population, young median age, expanding tech sector, research triangle. This isn't a speculative spike, it's structural growth. So, what's the takeaway? North Carolina is no longer the pass-through state between Virginia and South Carolina. It's one of the most dynamic real estate markets on the East Coast, with massive government backing and solid economic fundamentals. If you're thinking about investing, the timing is now. The multifamily and workforce programs open in the first months of 2026. In 6 months, a year, this window will be closed. Here's what I want you to do. First, leave a comment. Tell me, are you considering North Carolina? Have you already invested there? What other East Coast areas are you watching? Second, subscribe to the channel and hit the notification bell. I publish market analysis like this every week, and you don't want to miss the next opportunities. Third, share this video with someone who's looking for where to invest. Knowledge is power, and the more informed investors there are, the more efficient the market becomes. Final prediction? Over the next 3 to 5 years, you'll see North Carolina consolidate as one of the top 3 real estate markets on the East Coast. Charlotte and Raleigh-Durham will continue to grow, but the real asymmetric opportunities will be in the western counties under reconstruction and in small towns with government backing. Investors who position themselves now in the next 12 months will see significant appreciation by 2028 to 2030. Those who wait will pay premium prices for normalized returns. The choice is yours. I'm David, and I'll see you in the next video with another opportunity nobody's telling you about. Invest smart, stay ahead.